an unsustainable housing bubble, and an economy that has become so dependent on that bubble is a toxic combination. But that's exactly what has happened in Canada, Australia, and New Zealand. So let's get right into this article from the Globe and Mail, which is really actually very good. So it's written by Philip Colmar. We got to give him some credit there because this is a good article. So Canada is facing a massive housing bubble after more than 2 decades of cheap money and lax lending standards. And I like that he's actually pointed that out because, you know, I seem to be the only one who is talking about how lending standards have just gone off a cliff over time. And it's really been the case of in 2020 and 2021, you saw lending standards really head off that cliff. But lending standards have been going down over a long period of time. And that is important to note because as a bubble goes further and further on and affordability becomes more and more stretched, people have to essentially take on more risk. The financial institutions lending have to take on more risk because the people can't afford it. If their income isn't growing and affordability is worsening, then they have to take on more risk. And that is why last week we were talking about with the Equifax, you know, mortgage fraud, all-time highs, up 20% year over year. You know, it was particularly bad in 2020 and 2021. It's got a lot worse since then. And that's bound to happen when you have affordability, which is this wider gap between prices and affordability. And let me show you that. This chart isn't even updated, but it really shows you what has happened to affordability. You've got disposable income, which has barely done anything. And then look at what has happened here. It's just gone essentially parabolic. And that is not a good sign because housing's main fundamental is in fact incomes. Now that does not mean it cannot run away from fundamentals like Canada's housing market. We see this happen time and time again, but you have to remember that that is only temporary, whether it lasts 10 or 20 years. Eventually, when you hit an economic brick wall, you are going to come to realize very quickly that this bubble was entirely fictional. It was predicated on fictional wealth, and that has really been the case in Canada. Some people have been able to lock in that wealth by leaving, but most people, they're not going to have that as an option. So the rise in home prices to nosebleed levels began in the early 2000s when Canada experienced tremendous wealth gains from the commodity boom. That had the effect of propping up the Canadian dollar, which would weaken exports by making them relatively more expensive. The Bank of Canada therefore kept policy too easy during that period to deter additional currency appreciation. And he's very right pointing that out. That is very true. And I would also argue that private debt levels, household debt levels, they were a lot lower before the 2008 financial crisis. So Canadians' exposure to debt markets was a lot less than places like the US, the UK, where I'm from. So the credit tightening that happened after that really had no effect. And in fact, when the Bank of Canada lowered rates, it had the opposite effect. You know, people went lending mad. You had Canadian home prices that surged essentially in 2009 and 2010, and you had the money supply that grew drastically during that period too. So it's incredibly interesting to go through this. This aversion to currency strength was amplified after the US housing bust in 2008, when the Bank of Canada largely followed the Federal Reserve despite the substantial economic differences at the time. Canadian consumer price inflation remained relatively subdued until more recently, so there was little impetus for tight monetary policy at the time. In that environment, persistently low interest rates drove home prices ever higher. And then that leads to speculation. You know, obviously, when people start to see, that is doing really, really well, maybe I should start buying rental properties. And all this demand just comes in and the speculation just begins, and it comes in slowly and it gets worse and worse and worse and worse. And another thing that I want to point out is I wonder how much Airbnb contributed to the housing market that we've seen since 2015, 2016, when Airbnb utilization and Airbnb listings really went through the roof, because we've seen Airbnb that has grown massively. You've got huge amounts of listings, over 20,000 in Toronto. So think about that, the implications that has on a market. It's just extra speculation that you're layering on top of that already high speculation that you had. So it's kind of crazy, but housing bubbles are really not attached to fundamentals, even though you have people always trying to attach them to fundamentals. I mean, right now you have the mainstream media, most economists, even a lot of YouTubers who think housing markets are just a derivative of interest rates, essentially. If interest rates come down, housing prices are just off to the moon, which I think it's just absolutely ludicrous when you think of the environment we would have to be in for interest rates to be coming down. So the thing is, I always bring it back to affordability because that's its main fundamental, is income growth and affordability. And eventually it obviously resets to that. And then you'll have the next cycle that starts, essentially, the next bubble that grows, unfortunately. But it's interesting that he notes, obviously, the currency. I'm not so sure that the Bank of Canada really cares that much about the currency. I mean, look at the weak Canadian dollar right now, and they're not doing anything about it. And it is way weaker than we saw, in 2010, 2011, and in 2008 and 2007, especially. Obviously, they don't care about that. So I don't think it's just been the case with currency. I think it's more that they just saw it as a chance to essentially inflate, and the government pressured them to do so they could inflate even more. So you've had conservative governments, liberal and NDP governments, and they all do the same thing. They all just inflate these bubbles further and further and further and try to do that. And that's to fund essentially more and more government spending. So another thing that I want to note here is obviously the housing dependence. This is just crazy when you really think about it. So Canada's economy, more than 40% dependent on this housing bubble. That is just insane. So think about it. The housing bubble bursts. It's inevitable, whether it's now or in 10 years, whatever your view is, it doesn't matter. When it eventually bursts, in my opinion, I think it's already burst. I think we're just in the early stages of that bursting happening. But when it bursts, what's going to happen to this large amount of the economy that is essentially dependent on housing? You get into this thing called a doom loop, which is essentially housing goes bad, and then you have that affect growth because so much of the economy is dependent on housing. That means more job losses. That goes back and into housing being even worse. And then it just goes round and round, and you just get into this doom loop, essentially, where the economy is just going down and down and down and down until eventually you get to a point where prices become marginally affordable. And if the government doesn't come in trying to prop it up by printing hundreds of billions and trillions of dollars and handing out stimulus checks. And I don't really think they're going to get a housing bailout pass right now, if you think about it, because people are hyper aware of what's going on in the housing market, and the housing market itself has become a political issue as well. So you have to remember that, the housing market is a political issue. So all those boomers that are sat on all this fictional equity because it's unrealized gains, essentially, those are the ones that are most at risk because they are relying on that for their retirement. They don't realize that equity was built up as part of a bubble. You just bring it back to, like I said many, many times, it's a housing affordability that you have to bring this back to. And that really shows the bubble of how this has got away from it. And as you can see in the past here, you can see that housing affordability has ran away from incomes before, and it's gone down under incomes resets, and then it's done it again, essentially. And you can see how housing affordability essentially got a lot better during this time for a long period of time. And that was obviously after the 1990s recession. And the yield curve is now pointing to a recession of that magnitude. And I want to show you this because this isn't good for the economy as well. Canadian business closures surge, fewest business openings since Loch Ness. So obviously I can't say that word because I don't know if YouTube's okay with me to say that word. It's just the world we live in, guys. So Canadian active businesses have began to pull back. So you can see that active businesses have come down. I would argue a lot of this is probably fictional. A lot of this was to take advantage of the stimulus. A lot of that stimulus obviously went to businesses. People took advantage of that and put that into their own personal bank account and used that to bid up housing. I mean, there's been rampant fraud that has gone on and all those kind of things. And that explains a lot of the surge of this, which people aren't even factoring in. But what I want to show you on this is not that chart. It's this. So Canadian active business growth has been decelerating. So obviously you had what happened in the pandemic with business growth essentially going way negative, and then you had it come back. Remember, a lot of this was fictional essentially because it was just to take advantage of government stimulus. It was the bullwhip effect that created a lot of these businesses, and now it's started to tip negative. June was the first month that we've had essentially since 2021 that has been negative. 2021, just think about how times were different back then, and we are now talking about business growth that is negative again like in 2021. I mean, it just doesn't, and look at the trend, guys. Just look at the trend. I mean, you don't have to use any kind of technical analysis to see this trend. It is blatantly obvious. You can see it's coming down, and now it's starting to go negative. And just think about the lag effects of the rate increases that we've seen. They're only just starting to materialize in the economy. So this isn't going to get better. It's going to get a lot worse. Even if they were cutting rates right now, again, that has a lag into the economy. So all these things have lags. So people think that if they just cut rates, everything will be all right. Everything will just be off to the moon and off to the races again. And that's not the case at all, especially if inflation is high. The rates might not even go down that much. They might force the front end down, but then you might have this massively steepened yield curve, essentially because the long end is looking at inflation and going, yeah, we're going to keep rates high because we see inflation remaining elevated. Right now we have an inverted yield curve, but I'm obviously implying that they would reduce rates down to what they were prior to this all happening, which was, 1-2%. It's really not that much, which would be a massive decrease if you think about that with interest rates and monetary policy right now. And then if you look at housing bubbles globally, the reason why I said Australia and New Zealand, because they rank highly on there as well. You've got obviously Australia, New Zealand, you've got China that is on there, and Hong Kong that are big bubbles. Obviously, we know what's happening with China. China was one of the biggest housing bubbles in the world. Now it's probably Canada that is taking that crown. You can really see Toronto is on there. Vancouver is number 3. You can see London is on there. It's interesting, Bournemouth and Dorset is on there, but that's the spillover from London. Investors piling into those areas. I know about that. So it's kind of crazy what is going on. Australia, New Zealand, Canada, they always appear on there. And then the usual suspects like the United States and the UK and also China that are also on there. And obviously what's going on in Hong Kong, I don't even need to tell you that. Housing prices are declining there, and that bubble seems to be bursting as well. So you've got all these bubbles and people think they're never going to burst. That China is just going to be growing forever, and Hong Kong prices are never going to go down. And look, Hong Kong prices are going down. So you know what? The thing is, these housing bubbles, they always revert back to their mean. They always do. So it's very interesting to look at these cycles. And then if you look at the banks and how they've performed, because obviously the risk is concentrated between 5 big banks in Canada: Bank of Montreal, Bank of Nova Scotia, CIBC, National Bank, Toronto Dominion Bank. I put out like a questionnaire about this. Which stock did you think performed the worst? And you can see that CIBC is performing a lot worse on the year than any of the other banks. So wildly different, in fact. So it's double of Toronto Dominion Bank, for example. It's down 19%. So just think about that. It's down near 20% in a year compared to the next least one, which is the Bank of Nova Scotia, which is down 13.35%. So CIBC is obviously the one that is also the one that is having all these problems, essentially with mortgage underwriting that have been flagged by the regulators. They're being investigated for that. They are the ones that are most concentrated into the housing market and have the most residential loans on the asset side of their balance sheet. So CIBC is the one that is most risky, in my opinion. But you've got all these kind of other risks as well as the housing market, such as commercial real estate and China. The Bank of Nova Scotia, the Bank of Montreal, they're involved with China. How much of that has been going into developers like Country Garden and Evergrande? I'm sure we're going to find out eventually. But it's really interesting to think about this. The banking system, it's never been a more important time to diversify your banking and make sure you're just not in all one bank. Make sure you have multiple bank accounts, even bank accounts in other countries, so that you're never frozen out of the system. Make sure you've got cash on hand. That is always good in case of outages, because outages happen, as we've seen with Laurentian Bank, which has been an interesting thing. I've been looking into it, but it's very hard to find information on what's going on. Obviously, the CEO stepped down last week. But anyway, thank you so much for watching this video. If you've enjoyed this video, you might like this video that I picked out for you here. You might like this playlist that I picked out for you here. If you're looking for a VPN to avoid Bill C11, go to expressvpn.com/market mania. Thank you so much for watching and supporting the channel. I will see you in the comments, and I will see you in the next stream. Take care.